Shark Squad, welcome back. Today we're going over professional risk management. Yes, professional risk management, not the risk management you see these gurus telling you about, oh, risk 10% per trade, 20% per trade. Yes, we have accounts for that, but on our main accounts, we do not risk 10 and 20%. It might seem like I'm ranting here today, guys, but I am stressing it because it does not make sense, guys. Think about it. Really think about it. 10, 20%. All right, come on, let's go. Let's get into the video. All right. This chart is up here. So on the first column here, $1,000. If you have that size account, you should be risking around a micro pip. Really and truly, if you want to be around in the market for a long period of time, every $1,000, 10 cents. When we get all the way up, let's go all the way up, guys, to $100,000 account. You should only be risking $10 per pip, guys. $10 per pip. And you will be safe in these markets. Trust me, guys. If you take, let's take this $100,000 account size, right? And you divide it by $10. Guys, that's 10,000 pips, guys. You're telling me that you're going to blow 10,000 pips? Imagine if you're trading a strategy that only requires a 10 pip stop loss, right? So we have 10,000 pips, right? With a 10 pip stop loss. You have to lose 1,000 times in a row, guys. 1,000 times in a row. There's only 20 trading days in a month. So you're going to be around for a long time. Let's say 20 trading days in a month. So you have to lose 50 months, 50 months in a row. No winning trades at all, guys. Come on. If you have a strategy, of course, we have to implement the risk to reward next. The next thing is the risk to reward, guys. Right? The risk to reward. Right? So say we're doing like 3 to 1s are good. Yeah, 3 to 1s. So for every trade that you win, you're gonna win $3 and you're gonna risk only one, right? So let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades. Let's just do it random. Let's see what we get with this type of risk to reward, guys. So say the first trade we win, then we lose. Oh man, we lost. Oh, we're going on a losing streak. Oh, okay, we coming back. Okay, back to back. Oh, loss, right? Loss again, and then we win. Oh man, this has been rough. We took 1, 2, 3, 4, 5, 6 L's. 6 L's, guys. Right? Let me make sure. 1, 2, 3, 4, 5, 6 L's. We're down 6 points. We're down 6 points. Right? So we have four trades to catch back up. But guess what? When we win 3. Right? So now we have 12. Right? 3 times 4. Right? Is 12. So when you subtract 12 minus 6 now, although we lost more trades, right? Although we lost 6 trades and only won 4 trades, right? We still come out to $6, bro. $6, guys. Shark Squad. Risk management, risk to reward ratio, and sticking to at least I would say 1/4% per trade. When I mean 1/4%, let's say that same $100,000 account, you divide it by 100, you're gonna get 1%, right? And then you just divide that into a quarter by 4, and you're gonna get $250. So out of $100,000 account, you're risking $250, right? That's gonna be your 1/4%, guys, right? And it's gonna be real conservative, real safe. Guys, if your account is small, do not get duped into feeling like you need to risk more to make a lot of money with your small account, guys. Leave the little money there, right? If you have $1,000, leave that money there. Do not risk $10 per pip on $1,000 account. Wait, because the money that you lose, you could have just held on to it and then add more. That new account that you're gonna start, that new account, you can just add that on to the $1,000, and you preserved your capital. You preserve your capital, guys. I know this seems like a rant, but my Shark Squad, we have to be disciplined. We discipline over here at the Shark Squad team. We're disciplined, okay? Discipline. In psychology, the number one thing that's going to be a filter that you develop to master your psychology is, first, on your trading plan, master the risk management. Master the risk management. If you need to, do turn something into a hobby, like to make money, or do something you don't want to do. It doesn't matter. If you really have a passion for trading, you're gonna get it done. You know, get a side job, deliver pizzas. You must have heard this before, but scrape some change, do whatever, guys. I don't care what it is, because as your account grows over time, plus you adding money to the account, guys, your account is going to get there where you can eventually start to do things, live off of the account, pay little small bills, stuff like that. Invest in other markets, like the stock market, for long-term investing, things like that, guys. But this is the way you do it, guys. If you're trading for a firm, for a prop firm, stick with this, guys. Stick with this. This is going to be perfect. You're going to have the account. You're not going to blow the account. You're going to be around for a long time. If you get funded with $100,000, come on, guys. This is what you got to do to be a professional. This is what it takes. I'm not here to sugarcoat anything. These gurus, they try to tell you, if you're good at what you do, you can risk any amount that you want because you know what you're doing. Guys, sometimes we make mistakes. Sometimes the market does not do what we want at the time. And it doesn't work like that. Basically, we're trading patterns and stuff like that. So we have to wait for setups. Once that setup is gone, you have to wait for another one, guys. It's all about discipline. So we can't chase the market, and we can't make the market do what we want it to do. So take a screenshot of this, get your notepads, jot down. This seemed like a rant today, but I have to stress this over here at the Shark Squad team, guys. This is the proper professional risk management. Thank you, guys. Until the next episode, Shark Squad, we're taking over 2022. Let's go. Let's go. Until the next one. Peace.